You know, the window for early institutional positioning, it's closing. While a lot of investors are getting distracted by the headlines, the real story, as always, is in the data. So in this explainer, we're going to break down the institutional flows and the market structure shifts that are happening right now so you can see what is really moving the needle.
Okay, let's start with this number, -$4 billion. Now, this isn't a reaction to some news story you've already read. No, this is a data discrepancy that reveals exactly how institutions are positioning themselves before the market actually moves.
We're going to break this all down into 3 parts. First, we'll look at the pre-news trading volume that flagged this whole move. Then, we'll dive into the global liquidity shift that's causing it. And finally, we'll touch on the future of asset infrastructure that's being built in the background of all this noise.
All right, point number 1. That $4 billion outflow? It's a textbook case study in institutional positioning, happening well ahead of any kind of public announcement. The timeline here is really what matters. The data shows a statistically significant institutional sale of Bitcoin that happened 4 full hours before the news about Greenland and Japan even hit the wires. So you see, this wasn't a reaction. This was informed positioning.
So the key takeaway here is pretty clear. This was not retail panic. The data points to a calculated, coordinated reallocation of capital. We're talking about institutional players who had access to information that the public simply did not have yet.
Institutional updates move fast. Subscribe and hit the bell to ensure you get this research before the market reacts.
Okay, let's move to point number 2. That $4 billion trade wasn't some isolated event. It was actually a reaction to a much bigger global macro catalyst, and it's impacting all asset classes.
And that catalyst, it's anchored to this number, 3.91%. So what is this? This is the yield on the 30-year Japanese government bond. And its rapid rise is sending some serious shockwaves through the entire global financial system.
And here's the underlying mechanism. It's called the carry trade unwind. See, for years, big institutions have been borrowing cheaply in Japanese yen to go and invest in higher-yielding assets all over the world. But now, as Japanese rates are starting to rise, those loans are getting expensive. This is forcing a mass sell-off of assets, like Bitcoin, to repay that debt. And the result? A significant contraction in global liquidity.
And the effect on the market structure is just crystal clear. While Bitcoin saw that $4 billion outflow in that key window, gold experienced a market cap increase of $700 billion. This is a classic flight to safety. You're seeing institutional capital reallocate from risk-on assets to traditional safe havens because of this massive liquidity shift.
Video editing takes time, but the market doesn't wait. For immediate updates and breaking news the moment it happens, join the Telegram newsfeed. All right, now for our third and final point. While all this short-term market volatility is grabbing the headlines, the real long-term story is about the technological infrastructure that's being built quietly behind the scenes. So a recently filed patent from Chainlink, for instance, reveals a framework for something they're calling autonomous AI governance on the blockchain. Now, what does that actually mean? Well, it's about creating systems that can manage digital assets and execute these really complex agreements without any direct human intervention. We're moving way, way beyond simple transactions here.
Essentially, the patent lays out this 3-step progression. It all starts with decentralized data verification, just to make sure the information is trustworthy. Then it moves to automated cross-chain execution of contracts. And the end goal is a completely self-sustaining digital asset infrastructure. This is basically the foundational operating system for a more autonomous machine economy.
Now, as we've seen, this liquidity shift has pushed a ton of capital into precious metals, and particularly into gold.
I analyzed the second asset in that partnership, silver, and what the recent squeeze in China means for portfolio positioning right here.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.